Hi everyone, welcome to today's video. So today I have a very interesting penny stock story for you. You have to watch the video till the very end because I'm not going to reveal whether I'm investing in this or not investing in this. I will keep dropping the hints in this video and I would request you to give me the answer that should we invest or should we not invest in this penny stock. Also, please watch the video till the very end. There is a very interesting challenge that I will do. The challenge is that if I get enough yes, that most of you are going to invest in this company, plus if I get like 5,000 likes on this video, I am going to make a certain investment on this company just for the entire community to track the progress. Now this video is going to be interesting because I'll share a roadmap with you to do fundamental analysis of penny stocks. You will see how to read different pieces of data and then try to assimilate all that information together and factor that into your buying or selling decisions. Okay, so without further ado, which stock am I talking about? I'm talking about a company called as Fraser and Company Limited. So this company is trading at around 9.5 rupees. So therefore it's a trading stock. Now should we buy it? Should we not buy it? How is it that we should start our analysis and what are some of the key things that we should remember? So anytime you pick up any stock, the first key thing would be to understand truly what the business does. If you don't understand that, then you are in big trouble. So at least go and read its website. So that is literally step number one. So let's go on Fraser and Company's website and see what they actually do. So Fraser and Company is a supplier of all type of construction material to builders, including interiors of the property, this, that. So basically they are a supplier to interiors and construction companies. Their clients include Shraddha Group, Lodha Group, very big, Novotel, Imagica, and bunch of different big clients are there, right? And what do they simply do? If we quickly scan through their products, it will give us better understanding what precisely are they doing. So they are into providing construction material, they are providing finishing, they are providing basic essentials like electronic items, generator, this, that. And they are also doing modern interiors, right? So they are doing a bunch of different things. Seems like a very complicated business because they are not launching like any specific niche product. So essentially, just by going through the company's website itself, you can figure out that, okay, they are playing a very big game here in the sense that, okay, they are helping with the construction material supply also, doing interiors also, and doing bunch of different things also. So probably they are not a specialist in any particular value chain of construction. So value chain of construction means, for example, constructing a house is a part of a value chain. Another aspect of a house would be doing an interior. So that's a part of a value chain. So they are literally doing everything under the sun. Now, generally speaking, this is not bad. So there are a bunch of businesses that can both forward and backward integrate, right? So forward integrate. Now, what is forward and backward integration? Forward integration, let's understand it from an example. For example, we have Reliance. So Reliance Industries, basically, let's assume that they are only into refining petrol, right? So that is their core business. Forward integration means that Reliance, if it opens up its petrol pumps, that's forward integration. Backward integration would mean they are going and extracting oil. So that is backward integration. So essentially any business would have a certain value chain, right? So value chain, and businesses get forward and backward integrated all the time. So this particular Fraser and Company, what we are talking about is that in the construction industry, they are literally doing everything under the sun. That is what the website tells us. Now this is necessarily not bad, but if you're a new company and if you don't have a specialty, usually it doesn't work well, especially in construction or commodity like good. I will explain it subsequently on the video also, but very important concept for you to pick up. So first step concluded that we understood what exactly is the company doing. We get a sense. Okay, now let's try to look at the pricing history and pricing chart. So I'm here on Tickertape, and by the way, Tickertape is free for this month. So if you go and want to avail this offer, check the link in the description box and you can start using Tickertape for free. Now if you take a look at the charting history, you will see that, okay, you know what, at one point in time the stock was trading at 58 rupees, 60 rupees, and now it is sitting at its low end of 8-9 rupees and it is just fluctuating like a heartbeat right now. Okay, so is this like a deep value buying opportunity? Now people who regularly watch my video, comment very quickly what deep value buying is and name one investor who does value buying. So this will help me understand that you're learning something out of my videos also and watching it regularly. So not a very healthy sign that the fall happened, but there can be multiple reasons for the fall, and if we understand it, no harm in terms of doing a value buy. So next, what are we going to do? We are going to take a very quick look at the financials and try to see if the sales are increasing and the profits are increasing. So if we go to 2018 data, okay, this looks amazing, right? From 0.73 crores in revenues, 37.26, okay, are they doing it profitably? Net income, yes, they are doing it very profitably, right? So even the profits have increased. This will tell you that, okay, for the last 3 years, the performance has been going up and it's actually been very profitable. So should we just jump and buy this stock? No, we should go to step 3, and now then we should investigate what was the reason for the fall and what probably might be the future prospects. So you can do this on Google, or you can aggregate different other research material to figure out this information. So here are some key points about the business, that till 2015 the company was engaged in operations as a general merchant and traders of goods and commodities, and it was working on commission basis. In 2015 it started acting as a selling agent of fabric and allied products, so it was essentially a trading based company. 2016 it started import exports of semi precious natural stones like diamonds, ruby, pearls. 2017 diamond business completely. 2019 it has moved to a completely different model. So honestly, all the financial data that you had looked at, it is pointless, okay, because this company is moving into different new businesses, and we don't know. As retail investors, we have very limited information to make a decisive call on such businesses. So the story so far is very simple, that sometimes when you look at businesses, they look super lucrative on the balance sheet, that hey, revenues are growing, profits are growing, let's just jump in, buy it. But no, do further investigation also. By the way, the disclaimer here is that this is not a buying or a selling recommendation. Probably this business might skyrocket and become the next Google. I don't know. But bottom line is that we must act on information as we have. So what we should do next? Next, we should go and take a look at investors. Who are the investors? Let's just try to see if there is some smart money flowing, what has been the share of promoters, and all these basic details. So let's go to promoter holding. And let's try to see what is happening here, right? So from 2021 onwards, we see some data. So essentially, there are like big investors, Yogita Shivhare, Omkar Shivhare, etc. DIIs haven't touched this stock, and public has been touching this stock. And probably these are like big ticket investors. These are not like basic retail investors like you and me, right? So these are HNIs, they have a lot of money, crores and crores, and they are pouring it into the company. So there are so many different players who have entered and have purchased decent amount of stock. So rather than a listed company, this looks like a startup. So when you actually launch a startup and you're dividing up equity, what happens is that, for example, this is your startup and you have divided it into like different bunches. You have bunch of 10, 15, 20 co-founders, and everyone gets like little stake. If you bring on external parties, you give them little bit of equity. The equity proportion looks more like that rather than promoters holding a large share. For example, here you can see that promoters hold around 28% of the stock. Now you also have Yogita Shivhare and other people like Omkar Rajkumar Shivhare. They are also holding the free float of the stock. So essentially what I'm getting at is that this does not look like a listed company. This looks more like a startup shareholding pattern. Very important for you to understand. So what is happening behind the scene here is this. This company is pivoting massively from one business model to the next. For example, they started out with something in 2015, moved to a completely different business. So in order to do this pivot, they are pivoting from one model to the next, they need money. So they dilute equity to bring on other investors. That is, they are moving from boat A to boat B, and then from boat B to boat C, and so on and so forth. So essentially, to a retail investor, just by understanding the story tale here, I'm assuming that all of you would understand that, okay, you know what, this is a risky business to invest. But now many of you would turn and say that, Akshat, you know what, this company has been growing in sales, it's doing well, it has existed for so many years. You showed us the list of the clients that this company has, Lodha Group and bunch of other big names. And it's very likely that this business model would be sustainable now. They have experimented so many times, they have pivoted their business model. They might be successful. If I get to purchase this stock at like 9-10 rupees, and it can become like the next item. So why should I not go and purchase this stock? Okay, so here what you should do is that you should not be worried about the history of the company too much, and you should be worried about the future of the company per se. So what you need to do here is that you must do a simple analysis of whether or not this current business, does it make sense? Does it have any strength? Does it have any competitive advantage? If the answer is yes, then you are literally judging it as a startup investment. And one of the models that management consultants use to analyze business is called as Porter's 5 Forces model. It works really well for commodity oriented businesses like construction. So let me very quickly take you through this framework in context of this particular company. Right. So Porter's 5 Forces model looks something like this, right? So this will be a visual representation and it has 5 parts, 1, 2, 3, 4, 5. So you need to judge any business from these 5 particular domains, right? So let us quickly do that. So the first domain is that threat of new entrants. Now, whatever this company is doing, it is providing construction materials, doing interiors, and bunch of different supply chain management. Can it be done by someone else? The answer is yes. For example, if I am Lodha Group, do I necessarily need to depend on this particular company? No, right? I can go and figure someone else out in the market and I can give them the contract. So is there threat of new entrants? The answer is absolutely yes. This is a commodity oriented business. This company does not have any advantage. Now, how do you remove threat of new entrants? You can't remove it, but you can mitigate it. For example, if there is a very old company, right, and it has a lot of brand value, then Lodha Group might want to transact with that more vis-a-vis a new company. Second point could be that some company has massive cost advantage. They can execute the contract that is given by Lodha Group at like 50% of the cost what Fraser and company can do. So prima facie, it looks to us that Fraser and company does not have any massive advantage when it comes to preventing or building that barrier to entry. So let's move on to the second category, which is threat of substitutes. Now this is somewhat analogous to the first part. The first part literally meant that, hey, can new competition come into the picture? Yes, new competition can come in because the industry is not too difficult to enter. Second is threat of substitute. So substitute means that instead of going to Fraser and company, you can go to Akshat and company and get your work done. So again, this part is fairly self-intuitive. Now comes the third part, which is bargaining power of the buyers. So for example, let's say Lodha Group and Fraser and company are negotiating a contract. What should be the charges for Fraser for doing an entire interior for a Lodha Group building, right? Now, who do you think has more bargaining power here? Is it Lodha Group or is it Fraser? I think Lodha Group, because they have 20 other such suppliers where they can go and negotiate in terms of receiving payment. So for example, if Fraser does all the work, will it get paid on time? What would be the cash flow, cash management strategy? All those are very important points. A parallel example here would be of Amazon. Now, Amazon as a buyer from different distributors has so much power that if they say that we are not going to pay our distributors for, let's say, 60 days, they still have to agree to it because Amazon literally is a monopoly and they're already doing it. So that is how companies like Amazon stay cash rich. Now comes the fourth point, which is bargaining power of suppliers. So supplier means that, for example, if Fraser has to do interiors for Lodha Group, then what does it need to procure? Then maybe it would need to procure some panels, right? Then maybe some like iron or whatever. All these are commodity focused things. You can't save a lot of cost on this front as well. So even this does not seem to be very promising for this particular company. Now here we have to do industry analysis and see to what extent the competition is there in this particular space. The competition in this space is insane because there are so many local contractors, other big players that are existing in this particular space. They are all competing for big contracts. So competition is also very high. So from this reason, as per Potter's analysis, we should not be investing in this business, and that is precisely what I'm going to do. I'm not going to invest any of my money in this business. Having said this, we also need to understand the trend that is going on in the market. So right now, there is something magical that is happening in the economy. What is that magic? The magic is that cash is trash. That is what Ray Dalio says, and that is what is happening. That cash is losing power and people need to invest in assets. They are investing in assets and they will keep on investing in assets for a substantial period of time, at least till the phase when the interest rate remains low. So due to that, what will happen? All the assets. So assets are things like gold. Assets are things like silver. Assets are things like stocks, cryptos, real estate, land prices. These assets will keep on getting inflated and inflated and inflated because people have no other option but to spend their money rather than saving their money in FDs where they are not getting any returns. So due to that, real estate right now, the cycle in which we are at, the real estate is a very beaten down sector. So if the entire real estate sector pushes up with the wave, then companies like Fraser will exhibit really fast growth. So the only reason to invest in this stock, according to me, is that the real estate sector is beaten down. This company is good at making pivots, right? They have switched from one industry to the next and the next and the next. They have existing contracts in place, which is great, awesome. They have a little bit of cash on books, which is again great. And in a rising sector, these type of companies can grow. So I've given you the pros and cons. Tell me in the comment section whether you'll be investing in this or whether you will not be investing in this. If I get enough yeses and if by chance I get more than 5,000 likes on this video, I'm going to go and invest 1 lakh rupees on this video just to keep a track of it and to share the progress with all of you. So I hope you enjoyed the video and I will see you the next time.